We do this market update every single seminar. We feel that it's really important for our investors to have their fingers on the pulse of the market, what it's doing, what the numbers are doing. Is it going up? Is it going down? Is it balanced? Is it a seller's market, a buyer's market? We want our investors to know, so we give this information every couple of weeks. We also post it on our YouTube channel, Crew TV, so that people who missed this seminar can check it out and see all the numbers for themselves. What I wanted to do today is I went to the Canadian Real Estate Association site and rentals.ca, pulled off some numbers which are very, very relevant in comparing the Calgary market to the Canadian market as a whole. And if you look at the top part there in the national market summary, homes in Canada, this is every type, have decreased. These numbers are year to date to the end of July. No, this one's July, because that's the latest numbers I could get from these two sites. So the average price in Canada has dropped 3.9%, and it's at 724,800, which is still a healthy number, but it's dropping. Single family homes dropped 3.7%. Townhouses, multiplexes 3.6%, and condos down 3.2%. So all housing types Canada-wide are dropping in price. And if you look at the average rent, it's still increasing. So Canada-wide, it has gone up 5.9% for July 2024. Now, looking at Calgary, the one on the bottom there, our home prices have increased 37.7% in July. Single family homes 11%, townhouses 14%. I think that 37% is wrong. It's 17.7%. Sorry, that's a typo there. Condos up 17% and townhouses 14%. So all of the housing types in Calgary are increasing. Just don't look at my top number there. It's totally wrong. And rent is also increasing. We pulled that number off of the rentals.ca site. So average rent in Calgary, now this is for all rental types. So it's 2 bedrooms, 1 bedrooms, 3 bedrooms. The average is $2,157. It's still below the Canadian average.
Yeah. So you might be sitting there wondering, where is Calgary heading? And we've been saying this for years, that the Calgary average should be around, we used to say, Tim, 650,000. Now, when you look at the average Canadian average, it's 724,800. Tim, that's roughly where our average should be. If not, Calgary should be slightly better at 750,000, just because we're an above average city.
Yeah.
So we've got the infrastructure here. We're going to get into all of that tonight, into all the stats, Tim, and what projects are on the go in Calgary to make us get to that number. But we really look at what's going on in Toronto and Vancouver. We're less than half of the value average in those two cities. So no wonder why you see so many BC and Ontario number plates out on the roads these days. It's because it's affordable here and they just keep moving here. And that, with low inventory, Tim, will just continue home prices upwards. And when you look at the average for condos, we're nowhere near the 526 in Canada, 526,000. We're all the way down at 346,000. And I'm telling you, these condos behind us, if you're anywhere downtown, I mean, we're just, Tim, 4 blocks off 17th Avenue, one of the trendiest avenues in Calgary. If you're I come from Sydney, Australia, Tim. If you're 4 blocks off, say, Paddington or near Bondi Beach or anything like that, those condos start at $1 million. And same as in Toronto and Vancouver, it might not be as high as $1 million, but it'd be around, 800 to 900,000. We are nowhere near where these condos are going to go in years to come.
Yeah. So looking at the next slide now, we did drill down into the Calgary market in particular. Now, I took the year-to-date stats. We usually go over the monthly stats where we are, but because we're only 3 days into the month of September, one of them was a holiday, we decided to take the year-to-date stats. So these go up to the end of August. And what I wanted people to look at is the total sales. Well, they dropped quite a bit from 2022 to 2023. Sales volume dropped almost 8%. That drop is falling. So what we're starting to see is the sales volume is bottoming out and it's going to start going up again. And you can see so far year to date, we're less than 1% down from 2023 year to date. So when we see the next interest rate drop, which is going to be tomorrow, probably 0.25%, maybe 0.5, we'll see. But once we see that, mortgages are going to start to become more affordable over time, and you're going to see more people jump into the market. And maybe you can speak about that gap between the summer market and what we're going to experience.
You can see what's really happening. I thought it was just summer because I was away most of summer. But anyway, what's really happening, and I was at the football game last night. The Stamps aren't doing good at all. We need some help. But anyway, I was talking to a client of ours, a very wealthy client of ours. He's like, what's going on? And we were chatting about what's going on with interest rates. People that are on the fence getting into the market, they're on the fence for a reason because they know interest rates are going to drop, and we're probably going to get a 1% drop, Tim. I say within a year for sure. That could be within 6 months to maybe 9 months. Who knows? And so people are just watching that. And when you get a 1% drop, as Tim was saying, even 0.25% drop tomorrow, it will bring more people into the market. But what's been good on our end is that inventory's finally got to 4,500. Now, yes, that's pending and active listings, but we haven't seen this for maybe close to 2 years, Tim.
Yeah, and you can see it in the new listings line there. In 2023, they had dropped, the new listings had dropped 12.52% over 2022. Well, you can see now it's up 7.8%. So we're starting to see that sway as well and start to go up, which is very, very encouraging for the market moving forward. Because as I can tell you that in the last 2 years, it's been it's been a struggle to find clients' properties because inventory has been so low. We've been in multiple offer situations so many times. It frustrates not only us, but our clients when they're writing 8, 10 offers, just trying to get a rental property. So once we see the inventory start to turn up again, more properties are getting listed. It'll be very, very favorable for our investors to get the property type that they want, and they won't be in a competing bid situation.
Yeah, so you know what? It's better for us, and it's better for people looking for properties. Where it's going to hurt someone right now is if they think they're getting into multiple offers. We just listed 2 properties this week, and you know what? We don't know what's going to go on there, but you just have to make sure that you price it correctly to get those multiple offer situations. And we have to remember that's what really creates a massive sale price at the end of the day when 2 people are bidding for that property. And if it doesn't create that initially, we've kind of misread that, or we haven't, we're not going to create that going forward.
Yeah, and what we're going to see increases, you can see on the third thing that I've outlined there is the average price. So far this year, we're up over 12%. But that doesn't mean that every single property out there is up over 12%. You really have to watch the market, which neighborhood by neighborhood, property type by property type, which we're going to go over in this seminar. It's rising, but we think that it's rising to get up to where that average where it's supposed to be in comparison to those larger centers like Vancouver and Toronto. It'll just balance out the market Canada-wise a little more, where our property prices are not so much lower than the other ones, that it's going to cause an imbalance. Too much population is going to flow in here for the cheap real estate prices.
Yeah, so that's it for the market update.